This is the weekly review for the week of January 30th to February 3rd, as well as this week's Sunday preparation. So, coming into the week, I was bullish, and my ultimate draw on liquidity was these equal highs, the high from December and the high from September, as well as previous week's high. So, I was looking for price to dip down into this daily fair value gap and form a long setup to take price higher to these buy side liquidity objectives. So on Monday's trading, I saw that price took out Friday um, low as well as these relative equal lows, and we dipped down into the daily fair value gap here, as well as we had a bullish SMT with previous day's low. So I saw we had this displacement up here, and we formed a fair value gap on the 15-minute time frame. This one right here. And I was just noting the balanced price range as well with this bearish fair value gap. So I set limits here, and it was in discount of this dealing range that I noted, and I ended up getting stopped out here. I know ICT said that the draw on liquidity for Monday's trading was this Sunday opening gap, which is that blue shaded area here. But personally, I would like more explanation as to why this setup failed. I was going into it prior to recording this, and I was seeing that maybe it could have been because we already took London high liquidity here, and we had that SMT so with NASDAQ, and thus we would be kind of in between two setups with this previous day low setup here, bullish setup, and then had a SMT and started breaking down here. But we didn't break market structure until here, which would have been your entry. So personally, I'm fine with taking this loss, but it's just something that I honestly confuses me, and I'd like more explanation on it. But we ended up having this break in market structure and then broke the opening range low here, and we went down to take these equal lows. Let's clear this chart up a bit. And then price retraced higher, and we formed this breaker and also had this bearish order block here in premium of this displacement range. We hit it and sold off. Then coming into the lunch hour, we rallied again, hit this bearish order block here, sold off during the lunch hour, and we had a market structure shift. So when reviewing this, I was seeing that these two trades could have potentially been taken because now we see that bearish PD arrays are being respected and the bullish PD arrays are being violated. So the setup off previous day low didn't work. Hit that bearish order block, hit another bearish order block, and we keep having displacement down, breaking sell side liquidity. So here we had that retracement into this order block and this fair value gap slash balanced price range. sold off also in premium of that displacement range. And then again, we had a second sell opportunity later in the PM session in premium of that displacement range from here to here. Another fair value gap slash balance price range. So what I noted in my journal is I think with these two PM session entries, you'd have enough evidence that price is probably going to be bearish for the rest of the day because of these two instances where we respect bearish PD arrays here and start trading off shifting market structure. And then we took the AM session low. We didn't have any SMT here. And then I tried to take another long for a power 3 entry on this fair value gap here. Honestly, this wasn't the greatest market structure shift because this high here is the clearer high that we want to see break. So this ended up being another loss for me. So at the end of Monday's trading, we had violated that daily fair value gap. So I was saying that I wanted to look for what was going to happen on Tuesday's trading to see if we were going to still be bullish. So coming into Tuesday's trading, I wasn't on the charts for the vast majority of the day on Tuesday. Really, I was just on my phone for like 15 minutes, and then I had to go to work, and I wasn't able to look at the charts at all. But what I did note was how we took Thursday's low, came into this balanced price range on the hourly chart, and had clear displacement away from it. So I noted this M15 fair value gap and hourly and M15 breaker. And because I was bullish, I don't have those showing up on the hourly chart. Because I was bullish on the week and I saw such a strong displacement away from this low on Tuesday, and likely Tuesday forms the low of the week, I had a feeling that we're just going to retrace back into this breaker and take off, even though this wasn't in discount of any dealing range here. So I didn't set any limits or anything. I just noted this. And when I went back, I also noted how we had these two hourly fair value gaps in here. So I noted this trade with a stop below this hourly fair value gap low. And then this trade was just based on a stop loss of the M15 fair value gap low. But one of the questions I would have for this trade is like, how do we know that price isn't going to retrace down deeper here and potentially come to this fair value gap? Because ICT took a long entry in here because we had a bullish SMT on the 5-minute time frame he noted here. But yeah, this M15 chart shows that like we didn't come anywhere near discount, and there was no clear PD arrays down here anyway on the M15 time frame. This was all just like an hourly fair value gap. So yeah, we dipped down into that and ended up trading higher to eventually take previous day's high and completely fill in the Sunday gap So coming into Wednesday's trading, we had FOMC. So I was just expecting consolidation prior to the 2 p.m. news event. And to be honest, FOMC was actually very clean. Um, I still had the bullish bias, and we ended up consolidating all from the high that we made here, and then all London session and part of the AM session. And we set up these previous day equal highs. And what I noted was this H4 fair value gap and H4 breaker. So this fair value gap here, and then this breaker here. And I noted the mean threshold of that because it was right below the low of this that starts the fair value gap. So when I was just looking at the charts on my phone, I just mapped out this trade right here. I didn't end up taking anything, but I was thinking that FOMC wanted to have a Judas swing down here, and also because we were consolidating, this would be kind of like an AMD play. So this is the accumulation, manipulation, and distribution up, and that's what ended up happening here. And also in the later portions of the AM session, we had price following that narrative where we had bearish price action with this failure swing, market structure shift here, came back up into the fair value gap, traded lower, came back up into this fair value gap and order block, with the drawn liquidity being this hourly or 4-hour fair value gap and 4-hour breaker that is going to ultimately send price higher to take previous week's high and these equal highs that were engineered just prior to FOMC. So this was honestly a pretty clean day, in my opinion. Ended up taking previous week's high and trading ultimately higher, and we didn't take out these equal highs yet. So coming into Thursday's trading, that's what I was looking for, price to eventually sweep these daily equal highs. Now there wasn't a super clean setup on at least a 5-minute on Thursday's trading. We had this SMT with the Asian low and the London low, and price ended up trading down into a hourly order block. This one right here, it hit the mean threshold of that and then traded higher, came back down and hit the mean threshold of this order block here and ended up going higher, taking these equal highs. But in terms of a fair value gap entry, I didn't really see anything. I noted this breaker here, and price eventually came back down into that. The important thing that I noted was that we took the equal highs here, but we didn't have any break, like bearish break in market structure. So we shouldn't see this move down here as bearish, right? This isn't displacement down. This is kind of just choppy price action down. And we came back down into the OTE of that swing low to that swing high. That's OTE in here. And eventually ended up trading higher, clearing out more of the buy side liquidity. And then I was just watching the PM session to see if we formed any bearish setup since we were above a pool of buy side, and we did end up having this displacement down, but we never returned into premium within the PM session because this here is already 4 p.m., which is the end of the PM session. But we did end up, spiking all the way here super deep into premium right at like 4 p.m. and then trading off, but this is already beyond the PM session hours, so I just noted that. And yeah, there was really nothing on the PM session for Thursday. Then Friday's trading, we had non-farm payroll, where we had this Judas swing to take previous day's low with a SMT here, broke market structure higher and came back down into this fair value gap here and ended up trading higher, taking the non-farm payroll high. And I just took a kind of test trade on this order block, just one contract. If it shows it, yeah, just one contract here, targeting this sell side or buy side liquidity up here. And we ended up having a SMT with previous day's high up here on this candle, broke market or had a market structure shift lower, came back up into this order block, and then sold off for the rest of the day. And overall, NFP was pretty much just consolidation on the day because we had this big FOMC expansion on Wednesday. And we already took this buy side here on Thursday. So that's why NFP didn't really do much besides consolidate in terms of the daily range. So it wasn't a bad week, to be honest with you. I didn't get much entries, but by Thursday's trading, or Tuesday's trading rather, I kind of had a clear picture on the week. So this was the setup that I longed on Monday coming into this daily fair value gap. That failed. Tuesday ended up forming the low of the week, had that displacement up, and right when I saw this hourly breaker, I looked at this as potentially the smart money reversal of a market maker buy model, with this previous week's high being the original consolidation up here, and respected that. Then obviously FOMC consolidated, dropped back down, and then finished the market maker buy model on Wednesday. So in terms of next week's trading, it looks like we're in potentially a market maker sell model here, with this being the original consolidation. We took out these relative equal highs, but I noted this volume imbalance here, as well as the August monthly candles consequent encroachment of the wick, as well as the mean threshold of the weekly order block. So that weekly order block here, and then monthly, that's the August candle, the midpoint of that wick. There's three confluences amongst this small area here, and we still have a US 30 SMT going with August high, so I'm not anticipating this high to be taken out if we're going to be bearish. So what I'm thinking is price is going to trade up and take previous week's high and form the potential smart money reversal of this market maker sell model here, and then end up trading lower. And the dollar index, I believe, confirms that too, because we see that February has a bullish seasonal tendency up until kind of the first week or two of March, and the price action right now supports that, where this looks like the potential quarterly shift here with this bullish displacement. We took previous month's low, we have a SMT inside this monthly fair value gap, we have this dealing range here, and I just noted all the PD arrays in the dealing range. So I think that we could form a potential daily fair value gap here within the next like Monday's trading, and then Tuesday formed the low of the week by trading down into this potential daily fair value gap if it forms, and then trade up to take these equal highs, that high and that high, and that's the 40-day high from this February 1st look back. So it could either end up just taking that or potentially coming up into this weekly fair value gap. But for now, I think it's probably going to do something like that. And this retracement here would be followed by an expansion up here into this volume imbalance on S&P. And then again, as we take this 40-day high, trade higher, S&P is going to come down and complete this market maker sell model. So that's my outlook on the month right now. So we'll see if price action confirms that. And then in terms of news, the one that I'm looking at is Tuesday. Typically forms the high or low of the week, and then we have this high impact news. Fed Powell is speaking, so I assume that that's going to move price a lot. And considering we're right at a potential turning point here, we could make the high of the week on Tuesday, and then that high impact news with Powell speaking could create the displacement down here on S&P or the displacement up here on the dollar index. So that's what I'm looking at. A note for silver. It's almost coming to my first entry here at this weekly fair value gap and weekly order block on the SLV ticker. I have a limit right here at the low 2027, and that's also in line with the seasonal tendency. But I also noted the bullish monthly order block here. Same thing here. This would be the bullish monthly order block. So that's the monthly dealing range and also the weekly dealing range here. So if it comes down into the monthly discount of the dealing range at this order block fair value gap, I'm going to buy some more here too, probably at the opening price of the monthly order block. But what I just wanted to note was the consolidation in the monthly fair value gap here, acting as resistance. That's going to fall in line with the seasonal tendency, because now within, I believe, February, it makes a potential high, and then we retrace down in line with the seasonal tendency. So that's why this monthly fair value gap is acting as resistance. And the same thing with gold. We're consolidating inside the weekly order block here, hit the mean threshold, and are now trading down. So I'm watching this weekly breaker here in discount. It's also coupled with this monthly fair value gap. So this is what I'm expecting in terms of price action for gold to then eventually continue higher and take out these relative equal highs. So yeah, DXY honestly looks super clean, so I have a pretty clear picture of the month. So yeah, we'll see how it turns out.